What's going on? What's going on, guys? You can hear me? Yeah, just give me one sec. What's going on, guys? Looks like we got comments coming in from. Just leave this right here just in case. Yeah, we got comments coming in from the BOJ right now. Yeah, I just don't want them to say anything. Just start recording this. What's going on, guys? What's up, James? What up, Wayne? Sim, what's going on? Good afternoon. What's up, Braxton? So, we're going to be focusing on the Australia's CPI data for this event. But first, we got Aruta's, the BOJ. Typically, over Asian session, we have to focus on these comments that comes in for the BOJ. They love to do this a lot. Expect to keep real interest rates expected to keep rising interest rates if economy prices move in line with our forecast. I believe tomorrow, if I'm not mistaken, I believe tomorrow Asian session we should have Tokyo. I think we do have Tokyo CPI. One sec. Do we have? No. Is it today? No, I'm trying to double check that. Yeah, I'll look into that in a few. Yeah, because it's something that we definitely have to focus on with with Japan's inflation. But they like to play this game a lot, you know, but inflation for Japan hasn't been really following the bigger picture. We haven't been seeing the rise in CPI in Japan. That's the reason why we just fundamentally we're not really seeing a strong yen unless we get risk off sentiment. That's what's really causing that strength. But it's something that we got to pay attention to, those comments coming in. You see that interest rates remain extremely low, you know, so definitely data dependent, but they're also not rising the rates. So they're not saying anything right now that could affect the yen so far. So that's a good thing. Really good thing. All right. So when it comes to Australia CPI, when it comes to this print, we only got weighted, right? Just one sec. Yeah, definitely don't like the fact that we don't have the high and a low for anything else besides weighted CPI. But we also know that the trend of inflation for Australia is it's pushing lower, right? So that's a good sign overall. So I feel that this print, the best opportunity is going to be a weaker inflation print. If we get a lower inflation print overall, that's going to be the best tradable opportunity for my opinion, because that just goes along with the bigger picture of the RBA, the Reserve Bank of Australia, because they already cut rates the last meeting. They already said they're willing to cut rates too if data supports it, right? And the last week we had the weaker labor data, and last week AUD was just like a no-brainer trade, right? We saw the weakness in the AUD currency for the remainder of the week after that print. So with another print like this today, if we could get a miss today with this, I think that would be the best opportunity. But just also be aware, right, that we could see just because of the timing, right, just because of the session, where it's a possibility if we do get a miss, right, we could see like just an example. We'll see probably like AUD USD. I use that as an example, just because of the session and the time. We could probably see something like this happen where we can get a spike lower and then we'll see it push back up, right? And then we'll see a drop for the remainder of the week if we get a miss. So even though like during the print, because it's Asia session, not a lot of volume in the markets, take advantage of the scalp. You could, or you could just still just hold break even, do what you want, right? As long as we got the direction. Thursday, thanks, Jonathan. Yeah, I thought it was All right, thanks, Jonathan. Yeah, so Tokyo CPI definitely would be important as well. But if we get a miss, right, I expect weakness in AUD, right? We're going to get that weakness. But the fact of the timing of the session, we don't get really a lot of volume at this time. So we could see a spike lower. We could possibly get a pullback, and then we could see it possibly continue to push lower later in the day, probably heading towards London session. I think that would be the better opportunity moving forward from a fundamental perspective. All right. So that's what we're going to be looking forward to. That's what I want to take advantage of is a miss. So I hope we get a miss. All right. Um, Even this is CPI. So, I'm pretty sure. Yeah, exactly, Jonathan. That's exactly what it did last week. Right. We got that lower inflate. We got that lower labor data and it came out and it was one of the best trades last week, so it was an awesome move. So I'm expecting the same type of reaction. So if we see that, also is inflation. So we're going to see the Australia 200, their equity markets is going to do the opposite. If we get a lower print, that should increase the AU 200 to push higher. So that definitely be a good sign. So now it's just about, okay, what is the best pair we could capitalize in? So just use it as a guide, guys. Whatever pairs that you want, whatever pair you want to focus on, completely up to you. But let's see, we're going to look at price action, and I'll let you guys know afterwards, like areas of support and resistance that we look out for the remainder of the direction. So we got time. We got about 15 minutes. And if you guys have questions so far, it should be very simple. The currency should follow the data. So that's what it should be very simple. A weaker print is what we want. If it's a stronger print, probably could get some strength, but that's not something it's not a pair that's not something I really want to chase personally. Just my opinion. I don't want to chase that a higher print. But we'll see what happens when it comes to the data. Where you find those comments on BOJ, that's Reuters. So, all right, makes sense, guys. Just put a one in the chat if it does. AUD CAD could be a good one too. AUD CAD. Sorry, I'm not looking. AUD CAD. I mean, I like they're both they're both dovish, my opinion. Like if it's a beat, yeah, it's already dropping. Let me see why. Well, CAD is gaining AUD is gaining strength. I don't see why. Yeah, I don't like the AUD CAD part because Canada is very tricky regarding tariffs, but we really haven't heard anything when it comes to Canada. Like their fundamental policies is dovish as well with Australia. So that's just the only thing, when it comes to both of that. I don't really like trading a risk asset against a risk asset. But if it's a beat, probably like AUD CAD could be a good one if it's a beat. Yeah, exactly, Trad. A miss would be the best option. Yeah, I look at AUD CAD too, just in case. But yeah, this is inflation. So no matter what pair you look at, just expect the reaction depending on the data, right? Because obviously it could be a dud. You know, like we could just see that data doesn't really give us the direction that we want. And we could just see, like, we could literally just get no opportunity. It's a possibility of that. So it really just depends on the data. All right. I like GBP AUD as well, but we also have for London session, we do have the Bank of England's inflation data too. So I want to see a beat for UK CPI. That's what I really want to see, a beat for their print. I think that would be a great idea, like, because this was the pair we was looking at last week. From, yeah, just looking at, like, definitely this was the rise that we was looking at from last week. So if we could get a miss in AUD and then get a beat for London session with their inflation data, that would be a really good. This would be a really good pair to take advantage of. But right now, AUD and NZD is rising, so I don't really see any headlines for it. But we still gonna wait until 8:30 anyway. Yeah, I don't see any headlines so far. Just the last things we got was from the Bank of Japan. Yeah, exactly. So a miss from this print would be great, and then a beat for GBP for London session for the Bank of England for the for the UK. If we could get a beat there, that would be a great opportunity. I just don't like that we're seeing all of this freaking strength right now from Australia. Like, Jesus Christ. All right, so this is the range, like majority of the ranges of the pairs. So don't, yeah, it just sucks to see like this type of reaction before the print. But if we get a miss, right? If we could see that AUD USD breaks below six, yeah, 630.50, right? That 6305 zero area. That's going to increase the odds for those sells, and hopefully we can start breaking below support if we see that this is a big enough miss, because we're already pushing higher. But if we get a miss in this print, I expect it to be very volatile. Is a possibility that this print is going to be very volatile. So you just have to be prepared for it. And we could probably just break below that support. Then that's going to be the opportunity pushing lower. All right. So I expect that to be a very, like, this is probably going to be volatile if we get a miss, if we see that inflation comes out lower than expected. Same thing for AEDJPY. If we could stay below 94,600, and if we get a miss, price action, most likely what we're going to get is that weaker AUDJPY, even though that the yen is weak right now. But typically, when it turns to those at 8:30, we're probably going to see a different reaction. So it's going to be very volatile towards Australia. And with a miss, I want to see AUD, GBP AUD push above 2.05300. If we could break above that structure, that's going to be the direction that I want to take that pair in. That's the direction I would like to see. But if we get a beat, right? If we can see that data comes out higher than expected, I'm not gonna chase a buy. Personally, I probably won't chase a buy. But if we break above 94.6 for AUDJPY, that's gonna increase the odds, right? You could take a good scalp from that. AUD USD, if we go hold above 63,100, that's going to be a good idea, taking advantage of that. And obviously, like, GA is already pushing lower. So most likely we're just going to see this give us another leg lower, at least probably around to 2.05 thousand. That would probably be a good target. And AUD CAD is going to hold above structure if we get a beat. And if we get a miss, you want to see that break below that support area, at least below 89,950 for continuation sells. So that's how I'm going to be looking at this print moving forward. We got about 10 minutes. So I'm going to focus on AUD USD. I'm going to look at that pair. I just don't like the yen. I would like to trade AUD JPY. I don't really feel like they said anything much here. Like right here, Japan's economy likely to continue growing above potential. That's hawkish. All right. Japan's economy recovered moderately with some weakness. That's neutral. Yeah, like I don't think they really said much. But right here, Japan real interest rates remain low. That's dovish too. Expect to keep rising interest rates if the economy. So it's just like data dependent. So I like AUD JPY could be neutral and AUD USD could be neutral too. So I think they both could be very neutral, either pair that you choose. Like I think you could take advantage of anyone. All right. All right, guys. So we got time. All right. So we got about 10 minutes. So it's color coordinated. So red, if the data comes all come in red, we should follow the red arrows. If the data all comes in green, we should follow the green arrow. If it's white, leave it alone. That means it's not going to give us an edge. If it comes in mixed, if you see a mixture of red and green, right, then we're just going to leave it alone. All right, guys. Makes sense. Just put a one if it makes sense. If you got a question, let me know. We got about 7 minutes. All right, 1-1. Good, 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 good. I appreciate you guys. What part you want to repeat? All right, Haas. So pretty much green should follow the green arrows. Green should be stronger AUD, but I'm not gonna chase. I'm not gonna chase buys. But if you want to, it's up to your discretion. It's okay if we get a beat and you want to take advantage of that AUD strength. You could. There's nothing wrong with that. But to me personally, I don't think that's going to be a really good idea. If we get a weaker inflation print and you want to take advantage of AUD weakness, I feel like that would be the better opportunity from a fundamental perspective. I feel like that would be the better trade. But it's probably going to be like last week, where from this data, we're probably going to see a quick spike lower, right, where you could take your scalp. Then we're going to possibly see a pullback and then see AUD more AUD weakness for the remainder of the day. For the end of Asian all the way to London, that's probably what we're going to get. But a miss is following the bigger picture, so that's why a weaker print would be the best opportunity. If it comes out higher than expected, like it has to be a massive beat. Like we have to see CPI, like those numbers have to be above 3% in order for us to say like, okay, yeah, like yeah, we got to take AD strength as a no brainer, right? So I think if we could see CPI data across, like if we could see like the year to year, right, come out above 3%, I think that would be something we can't ignore. That's where the strength of AUD most likely is going to come in very aggressively. But if we just get somewhere like just a miss, it don't have to be nothing. I don't feel like it has to be drastic. I think the miss is just really showing the trend of inflation is heading towards that 2% goal. So that's why I feel like a miss is probably, you don't have to do a lot of thinking, not a lot of thinking power when it comes to a miss. That's just going to increase the odds of a cut. But a beat, yeah, like because we could get, if it comes out mixed, right, or even if it comes out as expected, I feel like the bigger picture would still lead for the markets to expect them to cut rates anyway. But that's not something that would give us an edge to trade. We need an edge. So a miss would be the best option. It follows the bigger picture. It should be the easiest trade. So a beat only if we can see those numbers is above 3%. Uh, what is AUD's bigger picture? Yeah, so I got it here for you, man. We got 5 minutes. So you just go to the central banks tab. So you can just see it, just put it down for you guys. Like the last rate decision, they cut by 25 basis points because of inflationary pressures are easing, but and weaker growth. But the RBA was still cautious due to a stronger labor market. So I just didn't update it last week, but we finally got that miss in labor data. So this is what helps, right? That strong labor data is now out the picture. So still data dependent on inflation, which we do got today. So they cut rates, but they're still data dependent. So if we get weaker inflation, that should still continue that bearish outlook. So that's what we're going to be looking for. And then you can read all of this during your time, when you're ready. Yeah, I hope so too. Hope we get a miss. All right, guys, 4 minutes. Yeah, AB, we could talk about gold after this print. I'm gonna look at AUD USD. That's what I'm gonna look at. I would like to trade like AUD JPY, but I'm seeing the yen giving a lot of weakness right now. So that's the only reason why. Yeah, seeing the stronger yields is this reaction on the yields. It's what's causing the yen to get weaker. So yeah, it's making it a little more tougher to trade the yen for this event because of the yields. It just yeah, that spike up is like very annoying. I like it, but I do like AUD JPY as well. I think this is yeah, because I like where we are with market structure, but I think yeah, I just don't like what the yen is doing right now. All that weakness is just causing uncertainty. I don't want to take sells. Yeah, because you don't want to be in the right direction but trade the wrong pair. You know what I'm saying? But I still personally think that regardless what happens, we're probably going to see AUD, even AUD JPY drop. Now we got 2 minutes for the data to come out. Yeah, and expect it to be volatile. So get ready for expect it to be pretty quick. Yeah, you're probably looking at the lower time frames. That's why. All right, guys, we got 50 seconds. Depends on your broker. Like right now, at like 8:30, like it should be spreads shouldn't be that bad. It just depends on your broker. All right, we got 30 seconds. I'm gonna wait for the data, see if we get breaks of structure, and there's a possibility that this will be very quick, like last week. All right. All right. Five, four, three, two, one. All right. Waiting for the rest of the prints. We got that 2.4, but waiting for the rest of the prints. Not really seeing it, but this is what I like so far. All right. Everything came out as a miss. So let's see now. Once we get breaks of structure, then we should be able to see that AUD weakness to come in place. So this is good so far. But the problem is with this print is the other inflationary numbers, we don't have a high and a low. But we can see that the trend of inflation is also lower than expected, which is good. So I do expect a weaker AUD currency. All right. But when it comes, it's Asian session. So even though if we don't see the weakness that happens right away, I still expect the weakness at AUD probably is going to happen over London session, or it's going to probably, yeah, most likely at the end of Asian session, probably like around 12 p.m. or so, then most likely over London, just like what it did last week for Australia for the labor data. So I expect the same thing. So no breaks of structure yet. Once we get a break of that support, then that will be a trigger for us to be looking for those sells moving forward. Okay. So if we don't get it now, at least just set an alert at that area of support so you don't miss it. That's just the only thing you could do is just set an alert. And once we get that break of support, then at least you have an idea of why it's happening. All right. Yeah, around 3 4 hours after would be the best. Exactly. So typically, like around, I would say like after 10, we could probably get a really good reaction. So that's what I would wait for. Is probably that break of structure. Probably once we get 10 p.m. to come in place, then we'll see that weakness of AUD. The thing is just don't miss it. The delay is what I explained earlier. It's because of Asian session. So this is nothing new. We typically get this reaction. We got that spike lower, but expecting it to move like it does in London or Asia or New York session, it doesn't really do that. We kind of get these type of reactions now, and then we see the weakness happen later on. But there's no breaks of structure. So that's why price action comes in place when it comes to this opportunity. So just take patience. So the only thing that we could do is just set an alert at the support. And once we start breaking below 62,970, right? Like right at that support, that would be probably a good catalyst for sales. GBP AUD, if we break above that 2.05, 5400 area, that would be a good idea for buys. AUD JPY, it depends on the yen. I don't like the weakness because the yen is weak. So that's the only reason. But if we could see that the yen starts to gain strength, probably like 3 4 hours from now, then I would like the idea of the sells. But make sure that it breaks below 94.400. That would be the idea. Yeah, AU price action does look good, but just set those alerts, all right? Because it's Asian session. If it was New York, it would be totally different. But Asian session, just be patient, but set the alert because it may happen when you least expect it. And that's what happened last week. So don't want to miss this opportunity this week. All right. So yeah, I know you said you want to talk about gold. What do you want to talk about gold, BJ? You said yeah, sell limit order. Yeah, it's good. I expect sells. I like that idea too. I don't know what broker you're using, Philip, but your spread should be is a dollar pair, so your spread should not be that bad. Yeah, John, the Asian session, that's where the patience just come in place. But yeah, it's Asian session to me. And the time that I sleep is when the moves happen. That's why like I keep missing those opportunities. Is because when I go to the time I sleep, that's when that shit comes out. Yeah, you could come off mute. Let me
Can you hear me, Sakim?
one sec. Yeah, I hear you.
So you say that inflation, or you say that you talk about gold being a hedge against inflation, correct? And then, but at the same time, inflation is what pushes the Feds to be more hawkish on their policy. So today we had Kugler. He said he was talking about uh, progress on bringing inflation has slowed since last summer. And I know you said that. So basically, we have a speaker saying inflation is kind of becoming a problem again. It's getting out of
Yeah,
hand. And I know you said that the comments from the speakers don't affect gold as much. And there's other report that came out today about the U.S. Conference Board average 12-month inflation. And I don't really know how to read it or know much about it. But my question is this: in some aspects, I see that inflation causes the Feds to be more hawkish, which is bearish for gold in that train of thought. But then
yeah.
also, I'm told that inflation or gold is a hedge against inflation. So that would mean that gold is more, and just so I'm wondering what caused gold to go bullish today. There were some reports that came out on inflation. We have some speakers talking about inflation, and I'm just confused. Thanks for letting
Uh,
me talk.
yeah. So why gold went bullish today was that the yields, and you can look at the yields in the dollar, right? So at four, you could just tell, like right here at 4 a.m., and you look at the yields. So this is why gold just went bullish. It was just it's just does the opposite of the yields in the dollar, especially like this type of aggressive bearish move coming in place. So this was one of the reasons why we saw gold pretty much pushed higher. And yeah, when it's when it comes down to the Federal Reserve, I always been hawkish with their stance. Like I do feel that they have a hawkish pause guidance. That's why I've been wanting to see a stronger dollar, but we just haven't been seeing it. But when it's coming to gold, what's really impacting it lately has been its safe haven appeal. So the geopolitical tensions, the uncertainty of recession, all of that has been impacting gold previously. That's why if we look at the higher time frame, just pretty much this whole year, like until now recently, we just been seeing gold continue to rise, right? But it's all through 2025 when Trump came into office. That was all due to the uncertainty of tariffs. So that's been a reason for investors to come in into gold. But also central banks is also buying gold as well. So them buying gold, investors hopping into gold, and then uncertainty. So it was nothing to do with the Federal Reserve. It has nothing to do with the Federal Reserve staying hawkish. And then now we're seeing gold push lower from the highs. And when we saw the moves actually happen, like gold consolidated, so just seeing when something happens and then how it reacts to it, that's what helps you understand, like, okay, this is what's causing it to be important. And what's causing gold to consolidate was only when we saw that Russian Ukraine tensions also started to ease off. They started talking about peace and ceasefire. So now we understand, like, okay, geopolitical tensions is what's really impacting gold. So inflation, when we had inflation data, we just saw a spike, and then it just went back to focusing on geopolitical tensions. Because when Trump also came in on Friday and he announced that flexibility when it comes to tariffs, we saw gold also push lower from that, right? So that's where we got a better idea that, okay, so fundamentally, I understand what's moving gold. But with the inflation reports and when it comes to the central banks, like, yeah, I do expect that to cause more. I do expect a hawkish central bank, even if we get higher inflation. But that's not really what's driving gold for the moment. But fundamentally, yes, that's what really impacts gold. We see higher inflation expectations. Yes, that does help increases the price of gold, right? Lower inflation expectations, we expect gold to push lower. So yeah, but at the current moment, we're just focusing on what is driving it for the moment. So that's just the difference. Like, yes, that's still the bigger picture, but this current moment has been the markets is really being impacted from sentiment. Tariffs is what's driving the market. So until tariffs is out the picture, then we'll probably see inflation expectations come back to place. But the only reason why we kind of got it, not yeah, AUD USD breaking structure. So the only thing that we have to pay attention to is, like, yeah, inflation expectations are there, it's rising. We see that the Feds is looking for one rate cut, but we're not seeing the dollar react. We're not seeing it react. So that's the problem. All right. So yeah, I'm in AU cells too, guys, while I'm talking. But that's what we have to pay attention to, is what is the dollar doing. So if the dollar is not reacting, then there's no reason for gold to react. So when it's directly impacted by central banks, the yields and then dollar. But hopefully that helps. Could you unmute? Yeah, go ahead.
Do you ever take a trade without intermarket analysis? Like, for example, would you ever take a gold sell without some dollar strength, or is it 100% of the time for you?
Um, I feel like lately that's what's been happening. Like I don't feel that in this current time you don't really have to take a trade based off of the opposite of the dollar and the yields. I think it's when it's important economic data, then focus on it. But if it's like right now, Asian session, unless it's like a no brainer that you just see dollar strength that is like rapidly pushing to the upside, then ideally you should know, well, I probably don't want to take gold buys, right? Because it's like, dollar strength is very aggressive. So it helps you with not making the wrong decision. But like I would say like Asian session, London session, if you're looking for a trade, you specifically don't have to follow that rule. Like it's just a guideline. It's not really something you could have to stick to 24/7. But I like to stick to it when we have like inflation data and labor data and sometimes growth data. But other than that, if it's just like if it's irrelevant and if it's like 10 a.m., there's no data, uh 11 a.m. there's no data, then if I see like gold right now breaking structure and then it's like I like the price action, if dollar is pushing up, that's like an extra confluence. That's like okay, that's a good sign for gold sells. But it also depends on what's going on. Like if there's geopolitical tensions, like Trump says some crazy shit. Like he comes out and says, "Yeah, we putting tariffs on everybody, 100% tariffs." Then if you see dollar and gold rising together, then you could get an idea that that's a risk off mark. That's risk off. That's causing market uncertainty plus dollars rising as a safe haven. So like you don't want to look for the opposite. So that kind of gives you a guidance like, okay, maybe I should look for gold buys. So it depends on the situation. But yeah, like if you're looking for that, I only like to focus on it when there's economic data. But other than that, like you don't have to at this current moment until things change. Or I'm glad it clears it up. But if things don't change, then yeah, just focus. There's a reason why gold is consolidating. So I feel like personally, it's just tariffs. Well, we're gonna probably have to wait till April 2nd, and then we just have to focus on the yeah the tensions between Russia and Ukraine. So when those two things, seeing how that goes, is probably going to dictate the direction of gold. Just waiting for those two things. Yeah, so far, looking at AUD, we do got the weakness, man. Like I feel like it's really good. It's just going to take time. That's just the shitty part. It's just going to take time. But this is what I meant. You see that if you would have took AUD JPY, you see how like a pound AUD again is like another good one. But it's just a pair. That's why I didn't want to take the yen is because picking the pairs are important. But you can see the yen is still weak, but we can see that everything else is good. So now if you're looking at GA, hopefully during London we get a higher print. Then we could take advantage of that at London session. If we could get a higher print, that'd be great. Uh, being up all night. Yeah, bro. Asian session is like 2 a.m. to 5 a.m. for me. So 5 a.m. when the move happened. Yeah, that's how I feel at London. Reading your questions. Yeah. Yeah, there's a lot of details that I have to unpack. Yeah, I'm glad. In the course too, I think I covered gold too. And I put it here as well, just to like help with understanding what moves gold, what to pay attention to. I even talk about like right here, well, like the central banks buying gold, reason for gold prices to lower. So you got everything here as well, so it could just help gives you a guide, what causes it to be bullish, what causes it to be bearish, the main focus. So all of this is also helpful too, just to have your, and right, I'm neutral when it comes to gold too, because like we're still got a lot of uncertainty, so that's why I'm neutral with the fundamental outlook. But it's just an essential bank tab, and I also got it for equities so you guys could have that have that little guidance. Yeah, AU and AJ. Yeah, it's just the yen. The yen is what's really different right now. But all the other AUD pairs is moving pretty good. And you see that the equity markets, this is the signal right here too, is that we see that the Australia 200 is pushing higher. So this is how we got that. This is a dovish reaction. So this is what we want to see is that dovish reaction. So this is key, seeing that the equity markets is pushing higher, and then the currency monitor is getting and the currency chart is getting weaker. So that's what we want to see, But again, it's Asian session, so just be prepared that it's a possibility we're going to get pullbacks. Yeah, I'm gonna do some more updates for the course. Damn, how'd I miss AJ? I know it's just like last week, but if again, if I don't expect AUD to stall, but heading towards uh London session, I would hope that we get a beat in CPI. That would be a really good idea. All right, guys. All right, so that's why I'm gonna end it, guys. Hopefully this was helpful. Yeah, yeah, BJ. Thanks for the questions, man. And like even there's nothing, no such thing as a stupid question, bro. So just keep asking. Why is AUD weaker? Because the print, yes, inflation came out lower, so that's why we got a weaker AUD currency, Enrico. All right, guys. I will see you guys in the chats, man. Have a good one, dude. Where will you take profit? I don't want to take profit for this one, man, to tell you the truth. I'm probably gonna just break even. Like probably like if we could get somewhere around if we could get like 62 800, I'll probably break even there and then see where this could go. Because this is a this is dovish. The only thing that could fuck this up now is like if we get some optimism that comes into markets, like more positivity towards tariffs, if we get anything like that, like risk sentiment can mess up AUD and cause it to gain strength. But remember, it's Asian sessions, so pullbacks can happen, and then we'll see the continuations later. So always use proper risk management and just be cautious of your lot sizes. All right, Jonathan, have a good one, brother. Yeah, have a good one, guys.